Rajat Bhalla is planning to buy a life insurance policy. His insurance agent has advised him to add 3 to 4 riders. He is not able to understand what to do. Are all type of riders useful? Let us tell you in details about riders in this special show of Take It Easy. Life insurance companies are making their products attractive by customizing them according to the needs of the customers. They may offer other facilities along with the insurance policy. Your insurance cover can be further strengthened by making an additional payment of 1 or 2% of annual premium. These type of features are called riders. No rider can be bought separately. It is not a product but can be sold along with an insurance product. Now, the question is how to choose a rider. Insurance companies always look to increase their businesses. The more products agents sell, that much more money they will make. But the thing to note is that not all of such add-on products will be useful for everybody. We need to do homework on what to add on in our policy and what not to. The rider can be clubbed with the basic policy to increase the protection cover. You can also add more than one rider in one policy. There is no need to make any extra effort for this facility. Simply, at the time of filing the insurance form, just take the number of riders you want to add. But you will have to pay a little higher annual premium. Now, let us look at different types of riders. First one is term cover rider. Till few years back, there were only a few type of riders available in the insurance market. With the increasing competition among private sector companies, now you can add not one or two but a dozen type of riders in a single policy. By paying a small amount on your life, health and auto insurance, you can increase your cover substantially. Talking about life insurance, people like the term cover rider the most. Through this, you can increase the risk cover equivalent to the sum assured under the original policy. Your protection cover can be doubled by paying about 3% more premium. On the death of the policyholder, his family members get its benefits. Before opting for any one rider, one should consider various factors like age, illness history of the family and the type of the policy. Second one is critical illness rider. This rider provides protection to the insured in case of critical illness. The insurance company arranges for your treatment. This amount can be equal to the sum assured of the original policy. Many types of diseases are included in the list, but most people opt to cover chronic diseases like cancer, kidney, heart attack and bypass surgery. Under this, policyholder can also get compensated for loss of earnings. Companies put different conditions on the benefits of their riders. Similarly, the major surgical rider provides financial assistance to the policyholder for undergoing emergency treatment. In such a situation, the insurance company gives part of the sum assured to the insured. The customer should check the list of surgeries covered under this plan before opting for this type of rider. You can use this rider to avoid paying high premiums. Now, accident and disability. This is the most effective rider. In the insurance terminology, it is called ADBR, that is Accidental and Disability Rider. In case of accidental death of the policyholder, an amount equal to the sum assured of the original policy is paid to the nominee. A fixed amount is paid every year if the policyholder becomes permanently or temporarily disabled. One such rider is waiver of premium. Obviously, the earning person of the family buys the insurance policy. In case of illness or disability due to accident, when a person does not earn, how will he be able to pay the premium? In this situation, the rider provides the facility of the premium waiver. You will have to resume paying the initial premium again after recovery. Financial advisor Jitendra Solanki says that not all riders are useful as there are a wide range of policies available in the health insurance sector. Accidental and disability and wearer of premium riders are very useful. Both these riders are very cheap. One can opt for these riders while taking the policy. But you shouldn't think that these riders are more than enough. Assess your needs even after getting a rider. Keep in mind that once you have availed a rider, you cannot change it again. One rider can be availed only once during the course of the policy. So, Money9 suggests if you opt for a rider, you do not need to buy a separate policy to increase protection cover. You can make yourself more secure by availing riders at very affordable rates. In many cases, you can even add a rider for just 100 to 200 rupees. Which rider is useful for you? You should not decide this on the advice of agent. Think on your own. But before adding a rider, do assess its cost, as some insurance companies do charge a hefty amount for this service.